Well, Firstrand Limited recently launched their new generation investment management franchise called Ashburton Investments. Asset management had been a gap in the group's portfolio of franchises since momentum was unbundled in 2009. Warren Dick caught up with CEO Boshoff Grobler to get his thoughts on the new franchise.
Well, thanks very much for joining us, Boshoff. It's obviously great to hear about Firstrand's new entrant into the asset management space. Just wanted to get your idea and opinion around what kind of platform this is going to be in the context of Firstrand's businesses.
Thanks, Warren. In the context of Firstrand, as Firstrand enters new businesses and new business lines, it aims usually to do it in an unconventional way, challenging the conventional thinking. So one would expect that Firstrand ventures into this announcement around Ashburton Investments in a way that's going to challenge the conventional thinking. And hence the platform that we want to use is a new generation asset manager. New generation in the sense that we think investors' needs are best dealt with and discharged in this point in the market by giving them more sources of return and also more access to risk management than what they've been able to get in the market to date.
Ashburton is obviously a name that you've essentially vended in from offshore, where Ashburton used to be the offshore investment partner for Firstrand.
Yes.
Just in terms of the underlying components, what sort of activities, what sort of investments will investors be able to get exposure to through Ashburton?
Ashburton Investments is essentially the fourth pillar of Firstrand alongside the banking franchises, FNB, RMB and Westbank, but sitting separate from it. Sitting separate from it, it is essentially the fiduciary window through which investors can come and get the best of the entirety of Firstrand. So there are certain components that will sit within Ashburton Investments. Ashburton Investments will also, in addition to that, give access to products that sit in FNB, products that sit within the investment bank RMB. So maybe just in the pillar, so in Ashburton Investments, the separate entity, the fourth pillar alongside the banking franchises, there will sit the offshore Ashburton Jersey business that's been operating for 30 years. They've just had their 30-year anniversary in Jersey last weekend. Also, the single manager Ashburton business that was taken out of FNB Private Clients, RMB Private Bank, and placed into Ashburton Investments, as well as the BJM multi-manager funds that have been taken, that were placed into FNB Private Clients, RMB Private Bank as part of the merger between the two entities, stripped out and put into Ashburton Investments, and is now called Ashburton Multi-Managers. So it's those three long-only single and multi-managers, South Africa and international, as well as all of the investment platforms that the entire group will use.
When you talk about investment platforms, what specifically are you referring to there?
So all the licenses that we require to operate an investment management business, so that would be the category 1 and 2 and 3 licenses. The LISP platform, the Linked Investment Service Provider platform, through which investors will be able to gain access through pension and provident fund and life wrapping mechanisms, all of the products that are available in our remit. Also our management company, our Manco. And so all of the licenses that we require, platforms that we require for investors to come in a regulated way into all of the products within the Ashburton Investments product range.
Talking about that product range, you mentioned long only there. There's obviously a multitude of asset classes and both domestic, foreign and Africa, if you count Africa as an offshore or exterior investment strategy. What can investors expect in the way of the product lineup at the moment and in the future?
The point that you make about now and in the future is a very key point to who we are. The build-out of Ashburton Investments is an incremental build-out. So we start with 110 billion rands worth of assets under management. I can tell you just quickly what that encompasses. But that is a platform that we then can grow new asset classes, new jurisdictions, and new types of products. So currently, I've spoken about the long-only products that are available. But of the 110, that only amounts to about 43 in the single manager business and the multi-manager business locally, and 15 billion rand offshore Jersey assets. Already, Ashburton Investments offer clients about 20 billion rands worth of structured products and index-linked or index tracking products that we get from RMB as a product provider. So there's about 20 billion rands worth of those products taken into that 110 billion. And then there are principal products. So what we mean by that are those products that the investment banking division within RMB have generated and originated on its balance sheet, like credit, loans made to corporate South Africa, private equity investments that the bank has made into corporate South Africa and Africa. And those things are about 40 billion rands worth of assets that we have already made available to clients globally and also in South Africa. So that's the asset base that we're looking at. We will elaborate on that asset base as we try to solve for investor needs as they're articulated to us. But those are the main building blocks that we are looking at.
Okay, so we've got, it's very interesting to hear that you're going to be able to use some of the skills, the structuring skills, I guess, of RMB and bringing some products to the market there. And I know RMB have been very strong in private equity.
Yes.
What in the way of hedge funds is there at the moment, if anything?
So we are building out a hedge fund strategy. As we know, the regulation that regulates asset allocation for pension funds recently opened up the allocation for pension funds and private equity firms. And that product is what our pension fund clients want from us. Equally, there's a big push from National Treasury and from the Financial Services Board to regulate hedge funds. So there's a big push to bring hedge fund regulation or hedge funds within a regulatory remit of the Collective Investment Schemes Control Act. So those push factors for people trying to push money into hedge funds have put us in a position where we are building out a hedge fund capacity. The reality is that we are building it from a low base, because what I've mentioned and all the asset classes that we have available and that we are building upon, this is part of what we're incrementally building in order to offer an holistic offering to clients. Just on where managers will come from, as you know, banks, including RMB, have closed down in South Africa their proprietary trading businesses for regulatory reasons. So the Basel regulations, particularly Basel III, and the new pronouncements coming out of Basel even in the past few months, have pushed banks, investment banks, into a space where that activity doesn't make sense on the balance sheet anymore. So there are very good proprietary traders that have tried their played their trade in the investment banking space that are moving into hedge fund businesses. Also, there are other managers that are just wanting more cash to come through the door. There hasn't been a lot of allocation of cash through the current hedge fund of funds into new investment managers and new businesses. So existing hedge fund managers are actually looking for what we have to offer to them. That is broad-based distribution. In other words, we can get cash from places more than just the traditional hedge fund of fund managers that are in the country. We've got access into the US, into Canada, into Europe, into the Middle East, into Asia, to attract cash into hedge fund managers. RMB has got very, very strong prime broking capability. Firstrand has got a balance sheet that it can seed these managers with. So we feel that together with our risk management ethos, those are things that will attract hedge fund managers or proprietary traders that live on investment banking balance sheet into the Ashburton Investments, so that we can pick the best and the most appropriate in order to fulfill client needs.
It sounds very interesting. Obviously, I think your bread is going to be buttered in the long-only space and the collective investment schemes framework. How do you rate your competition there at the moment?
Look, there is very good players in the market, players with long track records, players with really good products, good people. So when we started thinking about investment management and how to fill this gap that opened up in Firstrand's franchise with the unbundling of Momentum and RMB Asset Management going with that, the question that the board asked of us and our chairman asked of us was, does the world need yet another asset manager? And then specifically thinking about the long-only space. So we're very cognizant of the fact that the competition is extremely strong, but we do believe that we bring a quality new player to the market. So if I maybe just distill that into products, So our Ashburton Jersey multi-asset product is a 30-year track record, 30 years of beating UK inflation plus 3%, consistently 30 years. And they were able to do that in ups and down markets. If you think about the 2008, 2009, 2010 period, that was a screaming bear market. And they won the Raging Bull Awards for offshore investment management for all 3 years. But that product has only been sold into the South African retail space. So now we are positioning that product to institutional investors, pension funds, life assurers and the like into South Africa as well. So for them, it's a quality new player which they haven't had access to before because we predominantly sold it to the retail investor. In the long-only space, if you just look at some of the Morningstar ratings, for example, our property fund, our multi-manager property fund that comes out of the BJM stable, was voted the second best unit trust last year within the Morningstar rating. So it's a quality product that has had a very restricted distribution force that sold it, that we are throwing out more broadly now. Even if you take our equity fund, South African long-only equity fund, that was managed for our private clients in the private banking remit, that also within the MoneyWeb Awards was rated, I think it was 9th out of 91 unit trusts. So it's quality products that we have sold not to the broad market and that we are now giving as a quality alternative to what is already a very good market space.